I'm waiting for the cover for the first page so that I can. Hi, good afternoon. Good
A few minutes.
everyone. Welcome to the second cash flow analysis webinar workshop that we're running, the Vele initiative. We're just going to wait one more minute until we have almost 100 participants registered for the webinar today. So we're just going to wait for one more minute just to hopefully everyone will be able to join in. And thank you for, as I said, thank you for being here with us. In terms of the agenda for this this afternoon, an hour and a half, if we go to the next slide, please. This is the content that we're planning to cover for this event. So I'm going to give a brief recap overview of the program. Again, my assumption is that all those organizations that have registered, have signed up to attend this event, are organizations that have applied for the program for the COVID-19 community-led organizations recovery scheme, and they have been invited to attend to submit the application form for stage 2. So I'll be running through some sort of key elements of the program and key days, especially in terms of days, key days and the process that we're expecting to follow for those organizations that have been invited to attend and submit the application stage 2. And then my colleague Adit Sawyers will be running through the main subject item of this webinar, which is about budgeting and cash flow. And with the aim that through this session, organizations will be able to put together their budget and a cash flow forecast for which is one of the requirements of the application form. So let's make a start. If we go to the first slide, I am Fabrizio Chavarro. I am the Vele Initiative Interim Program Manager, and I am the project manager from our end for this program. As probably some of you already know, this is a program that is being run by a partnership of 4 organizations. It's led by Power to Change, but there are 2 other organizations, Locality, which is the national organization, a membership organization, and the third member is the investment group. So, and we are the sort of 4 players into this program. As some of you already know, the program has been devised, it's funded by the National Lottery, and is an emergency program that has been designed to support voluntary sector organizations and small community organizations that have been affected by the COVID-19, by the pandemic. So this is an emergency program, and what we're planning to do is to provide grants between 10,000 to up to 100,000 pounds to those organizations, and helping them to minimize the disruption caused by the lockdown, by the pandemic. So the grants can be used to support organizations with their expenditure. Again, the expectation is that COVID has disrupted the financial situation of most community organizations applying for this program, and organizations will be able to use the fund with the running costs, i.e. they can use the grants for staff salaries, for the overheads. They can also use the grants to support the training, and also to support the running costs of any projects that they have in the pipeline before the COVID outbreak. They can also use, if we go to the next slide, please, they can also use the grant for small items of equipment. So they can be used for capital costs, but as I say, for small items of equipment. In terms of how much organizations can apply with this program, it varies depending on the turnover, the income of the organizations. So if you have an income of less than £50,000 in the last 12 months, you can apply for a grant of £10,000. If your income goes from 50,000 up to 100,000 in the last 12 months, you could apply for a grant of £25,000. And then if your income is between 100k to £500,000, then you could apply for £50,000. Also, if your income goes from £500,000 to 1 million, you could apply for £75,000. And if you have a turnover or income above the 1 million mark, then you can apply for up to £100,000. So as I said, the ranges is between 10,000 grand up to 10 grand up to 100,000 pounds. So that's in terms of how much you can apply. If we go to the next slide, please. What's the process that we're going to go through for those organizations that have been invited to submit an application form for stage 2? So in terms of what's going to happen, the cutoff point, the deadline was last Friday. And those organizations, by now, they should have received a notification that they've been invited to submit a full application form. In the next few days, we will be running, obviously this webinar is part of the offer that RELED and the program is offering to those organizations, this Cashflow webinar. And in the next 3 days, starting tomorrow, we will be running one-to-one support and advice sessions of 45 minutes to those organizations that they need help with the second stage 2 application form process. So my colleague, towards the end of this presentation, we will be sharing with you the link where you can book your appointments, your one-to-one sessions. Then on Friday is the deadline to submit the full application form for a stage 2. Friday is the deadline. And then we're expecting to complete the assessment process of those application forms by the 28th of August. So it's going to take 2-3 weeks until the 28th for the completion of the actual assessment. And then organizations and community groups will be notified by the 3rd of September where the application form has been successful for a stage 2 process. So that's more or less what's going to happen in the next 4 weeks. It is important to stress that, and I like basically to use this opportunity that, as I said, I'm assuming that those attending the webinar this afternoon are only the organizations that they've been invited to receive the positive notification that obviously they can submit the full application form. And I'll let you, if in the chat section, if you could sort of confirm that you have been invited, because I think that would be something for us very useful. If you can confirm that yes, you've been, you received the notification, the positive notification that you've been progressing into the stage 2 process, please. Then if we carry on into the process in the next slides, what is important in terms of in the submission of the application form is about the evidence and the supporting documentation that you need to provide by Friday. As I said, the program has been designed to support organizations that have been disrupted and have been impacted by the COVID-19, and therefore one of the key parts is for you to demonstrate and to provide the evidence about the impact and how your organization's financial situation has been affected as a result of the pandemic. So in terms of key information and key documents that you will be asked to submit with the application form, the governing documents, the Constitution or the Memorandum of Articles of Association. So that's one element. You will also need to submit your latest accounts. They don't need to be audited, but obviously you will need to present the the latest account. And also you will need to provide evidence of your income before the lockdown, before the COVID-19 outbreak. So it is important that the whole focus is that you need to provide evidence that the financial situation of the organization was in a good financial footing, and therefore when the lockdown started, then you were affected with those 3 or 4 months of disruption. So you will need to provide with your accounts what was happening before the pandemic crisis and after the pandemic crisis. If we move, please, to the next slide. You will also need to, obviously, one of the key pieces of paper that you will need to put together is your cash flow forecast for the next 6 months. So that will be a key document that you will need to supply together with your accounts. In terms of key decks, just to stress again the support that UL is providing. As I said, we will be offering sessions of 40-45 minutes per organization and between tomorrow and Thursday. So there will be 3 days of one-to-one support for round 2, because the program has 3 rounds. So right now we are in the 2nd round, and the approach and the methodology is first come, first serve. So the link to where you can book those appointments will be given to you when we complete, when my colleague complete his presentations. So I think that's it from my end, and I am now handed over to my colleague Adi, who will be running the workshop. Just one final point is that any questions on the program regarding the stage 2 process, any specific questions, any technical, can be sent directly to the following email address, please. So just make a note of that, please. Over to you, Adi. Thank you.
Thank you, Fabricio. Okay. Good afternoon, ladies and gentlemen. I'm here to deliver the workshop for budgeting and cash flow. My name is Ade Sawyer. I am an associate of UBELE. What the session will focus on today is I'll be looking at what a budget is. I'd also want to look at how to produce a 12-month budget, what cash flows are, and the benefits of doing a cash flow forecast. And then I would also talk about how to produce a 6 months set of cash flows. And then I'll look at how to monitor and the work that you do, okay? I'm told that what I present is a little bit technical, and what I'm gonna try and do is to actually break it down into simple language so that you all understand. And I wish that based on this webinar, you're all going to be able to make successful applications, okay? Before you actually start making the application, there are certain things that you need to get on board. These are the things that show that you are ready for funding. Your governance needs to be strong and effective, which essentially means that you should have the requisite number of people as trustees on the board. The board should be involved in making decisions, and the board should also provide supervision. The board should be meeting regularly, and the board should be renewing itself from time to time so that it doesn't get stale, but it becomes vibrant and on top of things. If it is a membership organization, then the organization needs to be democratic, that users are very much involved in helping the organization make decisions to put on programs that the users want to use. The quality systems in the organization should be in order. The requisite policies and procedures should all be in place. The projects should be viable and sustainable, which means that these are projects that have been well developed with the involvement of users so that it's heavily demanded. And then you must have indicators for judging whether your organization is successful and that you are making a resounding impact on the local area in which you operate. And then you also need to have the requisite tools for monitoring the progress of what you are doing, and ask yourself the ultimate question: are we sustainable? And then the last question you ask yourself is, do we have a fundraising strategy in place? Once all these things are in place, we can then start looking at what a budget is. But before then, Fabricio has said that you'll be asked to submit your accounts in the past. And really, this is just to show simple final accounts for most organizations, okay? On the left side is your income and expenditure account, so to speak, where you have incoming resources, which is made up of voluntary income, investment income, and several other grants or contracts from charitable activities, which gives you the total incoming resources. In this case, it's £1,076,966, and essentially it's broken down between restricted funds, that's funds you must use for particular things that you've applied for, and unrestricted funds where you have a free hand in terms of how you use the fund. On the bottom side, we have resources expended, which is the actual resources that you use in delivering the services. And if you take the resources expended from the total incoming resources, in this case, you realize that you are left with 200,000, which is made up of what we call the net incoming resource for the year. Again, it's distributed into restricted funding and unrestricted funding, and you get your total amount. Most accounts show what happened the previous year, and that's mainly for comparison purposes. So for this particular organization, the fund balances that they are carrying forward is £412,000 around from 2006. And in 2007, they have made funds of 613,000 almost to carry forward into the next year. On the right side is a simple balance sheet. And what a balance sheet normally shows is what are the assets, if any, in the organization, what are the current assets, what are the liabilities. And if you take away the liabilities from the current assets and add the fixed assets, what you get is the total assets that are left in the organization. And this, as you can see from this chart, is represented by restricted funding, that is the 90,000 we have here, and by unrestricted funding, 522,000. It balances. So this is a simple account. What the account shows is the performance of the organization and the net worth of the organization. Okay, so I hope that you all understand the principles under which I'm working, because what I'm saying is that first you show your accounts to show that you're a viable organization. And now we move on to looking at budgets. Okay. A budget is a fairly simple financial plan. And what you do in budgeting is that you are looking at what you think will be your expenditure. And you are also forecasting your income for the period. The difference between the two is what one would call your net income. If it is negative, then you need to be able to look at how you are going to finance it. We all hope that it would always be positive, in which case you think about how you are going to reinvest it to actually provide more services. We all budget. And in this particular scenario, we have the chancellor who raises money from the taxman, raises money from us and spends the money on several other things. In these days of COVID, he's probably having to struggle to think about how he's going to pay for all the expenses that he's making. So what we do in budgeting is to match money that comes into us against money that we spend in providing services. Although budgeting are about future activities, sometimes we base our budget on our past performance. So if we know that last year we probably turned over 10,000, we can then estimate that, okay, maybe for the next year, we are going to have to deliver a lot more services. And therefore, maybe let's add some amount to our expectation for the future. Budgeting is also about judging the timing of our receipts, and so that we do not run out of money. And most of these are contained in the terms and conditions of our funding. Because we want to recover all the costs of providing services, it's important that we are able to apportion our expenditure and allocate our costs properly. And when we move into the new year, we look at how inflation is also likely to affect us. There are two types of looking at budget, which is a zero-based budget, which is when you've never provided a service before and you are now starting. A lot of people use incremental-based budgeting, which means that you have provided a service and you are now looking into the next year to provide more of the service. In budgeting, we need to be able to forecast our income. Again, it's normally based on how well we've done in the past year. and how prudent we have been in terms of how we have husbanded or kept our resources and spent it reasonably. The income we expect normally comes from one of four sources, either from grants, from gifts and donations, or sometimes membership fees, from contracts, and for some organizations, from trading activities, because I suspect that some of you are registered as community interest companies and therefore derive some of your income from trading. Again, we need to be able to cover all costs. So when we do a budget, we are not just looking at what we spend and what comes in. We are also looking at this new concept of making sure that the management costs within the organizations are covered, that all the monitoring and evaluation that we do of the project are also costed into the project. And for want of a better word, what we say is that evaluative capacity is built into the project so that as we go along, we are able to track how well we are doing. But costs behave in different ways. Normally, staff costs, the more people you employ, the higher the costs are. Material costs, the more of a service you provide, the more the cost of materials may increase. However, the unit cost of the product of what you provide may fall because it is not all the time that material costs rise. Capital equipment is pretty standard and you use it over time. But there's a critical question on that. Do we lease or do we buy the equipment? Maybe if we lease, it will be cheaper for us. Or maybe we don't have enough resources to buy it immediately. Overhead costs must be covered in most projects we do. But overhead costs are the standard things that are there, whether we provide a service or not. So sometimes the cost of premises, the cost of energy, the cost of communication, is generally the cost of doing business. They generally remain static, but sometimes with more activity, they may go up. And management and supervision costs are what we recommend that you always add now. Okay. So let's look at an example. What I'm saying is that let's look at an organization that operates within a 2-year period. It shows the funds that come in year 1 and the funds that is expecting in year 2. The principle here is that you know that if you've got some money from a funder and you are using the money well, you should be able to either get more funds from that funder. And the corollary to that is that sometimes most funders just don't fund you for a year, but they spread their funding over a 3-year period, which means that you've actually budgeted over a 3-year period in terms of delivering the services. Meanwhile, you are looking to other sources to raise more money to keep the organization going. In this particular scenario, we have 97,000 as incoming resources in the first year, which by dint of our having a fundraising strategy, we've managed to take up to 383,000 in the second year. So this is the income section, okay? Then we look at staff budget. When do we employ staff? Again, if you look at this, in the first year, we probably don't have a director. We just have an outreach worker. We are running a project, and the project is gradually becoming successful. So we know that in the next year, we are going to apply for more funds. And then we add on the on-cost, that's the employment cost, cost of advertising and everything. And at the top, what I'm stating is that for this particular organization, its staff budget represents 51% of its total income. For some organizations, it might be higher. But since most of us are providing services, we expect that our staff budgets are relatively higher than the other aspects of our budget. Then I talk about project and material costs. These are the things that are actually the cost of service delivery. So for this organization, that is an advocacy organization, it spends a bit of money on conferences, on commissioning papers, on printing reports, doing up its website. And again, although in the first year, it spent only 7,500, it expects that based on the funding that is going to get, it's going to actually spend as much as 133,000 in the second year. Again, the project and material costs are something like 30% of the incoming resources. And then as an organization starting up, it ends up spending 25,000 in the first year in terms of buying equipment and furniture and other resources, which it will not spend in the second year because it's already acquired them in the first year. Again, for most organizations, 6% represents a fair amount in terms of the capital cost of the organization. And then the last issue that I talked about are the overhead costs. These are things like rent rates, electricity and heating, telephone and apps, printing, postage, publicity, advertising, audit and accounting, staff training, volunteers' expenses, insurance. All these costs are generally termed overhead costs. We tend to spend them all the time, whether we are delivering a service or not. So again, we estimate, and in this case, what we say is that the budget is about 12% of the total incoming resources. And I've tagged on management costs because the cost of collecting monetary information, the cost of reviewing this data, the cost of having an external person coming in to evaluate the projects is about 15,000 pounds. And we say that represents 5% of the total incoming resources. I've shown this to actually show you what it actually looks like in terms of if you do the budget, okay? What I now want to go on is to talk about the actual process of budgeting that we are budgeting based on the requests and demands. So maybe you have 60 people demand, 30 people demanding your service this month or this year. Next year, if you estimate that 60 people will demand your service, then you are able to budget and make allowance for 60 people. The reason why we tend to use figures that we already have is that we know the cost, they are accurate from the previous year. So we can then know that maybe if we add some little money to it, the cost may have gone up, or we may be able to find out afresh. But budgeting is also based on management priorities, because the management might decide that we provided this service this year, but it's no longer needed. So we are not going to provide it. However, what our users have told us is that they want a slightly different service which will satisfy them. And I'm saying that finance officers work on the budget, they take it to their committee, it's approved, and it's all monitored by the treasurer, who monitors the budget every month prior to going to a management committee or a trustee meeting. I'm going to use an illustrative case, an organization that provides several programs to younger people, and I'm going to try and make it as simple as possible, that the older children go and are offered black art session. The younger children are offered something a little bit different. And what I'm going to show is to look at how one will construct a simple budget for 30 children or for 60 children, as the case may be. Okay. So we start by looking at staff costs. And because budgets are making assumptions, you need to be able to critically look at them. So, for instance, an assumption that we have is we need a new development worker who will be employed on a part-time basis at the rate of £20 an hour for 3 days over a 3-month period. We know that that's £3,780. And then we say that if we are going to only operate for 30 people, we may not need a sessional worker. But if we are going to look at 60 children, then we may need a sessional worker. And so how do we calculate the sessional worker? We are saying that, again, this will be at the rate of £10 an hour over the same period of time. And that we have more volunteers. In this case, what we say is that the volunteer costs are £10 a day, but if we have 60 children, then it will go up at £10 a day, it will go up to £720. And then we add on the cost of recruiting and if there are any benefits. And so what we realize is that the staff costs are different. For 30 children, it's going to be 5,568. For 60 children, it's going to be 8,648. So at the top are the assumptions that explain the figures. And on the side are what we are looking at. So there's a cost of an advisor. Maybe that advisor is the person who draws up the program for us, who is able to provide us with all the safeguarding, health and safety, and all those issues for this small project. So that cost of an advisor does not change, but all the costs change depending on the number of people. We now look at material costs. Again, most project and material costs increase with the number of people served. So in this case, cost of crayons will double, cost of paper will double based on the number of people. So for 30 children, we have 750 pounds, but for 60 children, we have 1,500 pounds. It has doubled. That's how material costs behave. Okay. Then capital costs, they tend to remain the same. So in this case, we need a camera, we need a laptop, and we need to pay for Zoom. And whether it's 60 children or 30 children is the same, because capital costs are generally fixed irrespective of. And then I talk about the overheads, that's the premises, energy, they remain the same. But you will notice that the communication cost is gone up, and so has the cost of administration. So whilst looking for 30 children, it will cost us 450 pounds, but for 60 children, the cost goes up a little bit to 650 pounds. Now, these costs are not just estimated or pulled out of the air. These are costs that we actually find out from the premises, find out from the energy, find out before we slot it into the budget. Okay. And then I talk about the management cost, which is maybe the cost of supervision of the project. So that comes up to 801 pounds when we are dealing with 30 children, and 1,204 pounds when we are dealing with 60 children. So the total cost of running this project is 8,804 if we are dealing for 10 children, and 13,247 if it's for 60 children. So in this case, we have actually developed a budget that has looked at our staff costs, it's looked at our capital costs, it's looked at our material costs, it's looked at our overhead costs, and it's looked at what I call our management costs. So this is a simple budget. If I translate all the figures into an indicative budget, we see what it looks like. The staff costs represent about 65% of the total income we are going to look at. The material cost, about 11%. The capital cost, about 9%. The overhead cost, about 5%. And in this case, the management cost, about 9%. So this is an indicative, simple budget. One is based on 30 children, the other is based on 60 children. And the costs vary depending on the type of cost that it is. Okay. We budget because it is important. We budget because it helps us to keep control over our cash and to also to control our credit. It helps us run a tight operation. It means that we are able to generate some surpluses, because when we are running out of budget and we're doing a variance, we make sure that we've checked the cost. No longer would we spend money just because it's been budgeted, maybe going over budget. And I'll talk a little bit later about when we are doing a variance analysis. Okay. Budgeting helps us to measure performance. It helps us to resolve unplanned activities. An accurate budget will help if we have to determine alternative sources of providing a service. Okay. So, sorry. So I've dealt with budgeting. Now, let me turn on to cash flows. Okay. A cash flow is really similar to a budget, except that the cash flow, you do it in terms of when you receive cash or when you spend cash. Okay. There's a cash cycle. Money comes in from funders or investors and is turned into assets and it's used to buy equipment, stocks, etc. The assets are used to deliver the services. Income is generated. For most of you who are trading, you generate income. For those of you who are not trading, the test of how well you are doing depends on the number of people you provide a service for and how well you are able to move them on. The income that comes is used to pay creditors if we accrue it and other liabilities that we have. The residue, if it's a business, is paid to investors. Most of this is retained to buy materials for the next cycle. So that cash cycle just goes round and round. And in some cases, more money is always made. So when you are preparing a forecast, in this case, you need to be able to state all the underlying assumptions. If we're going to buy something, we may be giving credit. And if we offer a service, we also wait for people to invoice us at a later stage. If we have loans, then we have to make sure that we know the conditions of the loans and when we repay them. Forecast, whilst the budget is about profit and loss or about income and expenditure, cash flow is about making sure that you don't run out of money. So you make sure that the money is there. So costs like depreciation are not included in the cash flow. And if you are registered for VAT, you need to register. You need to be able to take care of VAT in your cash flow. In a cash flow, you determine the open balance. That's money that you are carrying forward into the period of the cash flow. You calculate all your projected income. You split them between cash and credit. You calculate income that you are receiving from grants and probably income that you are receiving from people who you provided a service to who are yet to pay you. And then you calculate the projected purchases. And then again, you split the purchases into cash and credit. And then you are able to calculate what are the cash inflows and what are the cash outflows. Cash flow is about timing. For instance, if you take a typical organization, insurance is normally paid at the start of being insured. So it's yearly in advance. If you pay taxes, the tax is reckoned, but you pay it half yearly. Some people receive their grant on a quarterly basis. For utilities like gas and electricity, sometimes we pay it on a quarterly basis. Some pay rent on a monthly basis, some pay it on a quarterly basis. We normally pay salaries on a monthly basis. If we have a consultant in, we pay them as and when. Occasionally, we pay recruitment costs when you are employing people, and we buy equipment once and probably not for some time to come. And sometimes we pay rent monthly. And in most cases, when we purchase materials, we are allowed maybe 30 days in terms of an invoice to pay them. Okay. What I've done here is to look at a typical cash flow forecast over a 6-month period. These are the funds that are coming to the organization. National Lottery will not come till July. London Boroughs Grants comes in May. European Social Fund is coming in 3 different tranches or 4 different tranches in June, July, August, September. The Bearing Fund, we are at the tail end of that fund, so we are getting only 2,500. Barrow Cadbury Trust is paying us to employ somebody, so it's 15,000. They give it to us in April. And Lord Ashdown is a one-off grant we go to them for. And then other grants and membership are going to fall in July. And then we actually look at when we pay bank interest because maybe we owe the bank money, and we know that. So our income is estimated as and when we think it will happen. And that is why it's important to look at the terms and conditions of any funding agreement you have so that you know when the grant falls through. That, in a sense, may influence when it is that you spend money. We realize that staff costs every month, we pay for it. Cost of training, and recruitment is at the start. External trainers, we pay them maybe at the first 2 months. Premises is a monthly cost. Okay. Conferences, we probably go to one a year, costs us £5,000, which is a hefty amount of money. Then communications, maybe social media and advertising, the reports and newsletters that we subscribe to, our traveling expenses is budgeted for every 2 months at £50. Then accountancy audit, postage, fundraising activities, telephone fax. We always realize when it is that these costs fall through. And then service charge, we probably pay it up front. And then we look at budget for sundry expenses. This budget is the total column. We know that we have £141 coming in, and we know that we are going to spend £125, £125,000. The balance is going to be £16,073. But when we look at the cash flow, we realize that in the month of April, we probably spent $32,000, but only $18,000 comes in, which means that we are left with a net balance of $13,000. We are lucky that from the previous year, we brought some money over. So if we take the $13,000 from the $15,000, we are still left with a positive balance of £1,695 at the end of April. When we go into the next month, which is May, we only get in $13,000, but we end up spending 30,000. And again, we have a net balance of 17,000, which is negative. From the previous month, we've brought forward 1,695. But what we realize is that for May, we are actually seriously in overdraft. So if we have such a budget already, it means that if it's been presented to the bank would know that, oh, this cash flow forecast shows that our position improves in the coming year, so they may give us an overdraft to cover that amount of money. So like I said, in June, it's a better situation. All our monies, most of our monies come in, is 31,000, but we spend only 13,000. In July, 35,000 comes in, but we spend only 20,000. And in August, 21,000 come in, we spend 14,000. So we've moved from a position of what I'll call an unhealthy cash flow into a position where our cash flow is healthy. But because we've predicted this ahead of time, we are able to go to the bank and ask the bank to finance us. Or we may decide that we will negotiate so that some of the expenditure that we make in some of the months would defer them to another month. This is the essence of cash flow forecasting. Okay. But I talked a little bit about budget variances because in monitoring our budget, we are able to see that maybe a budget for 3 months on terms of salaries, but we spend 60,000. We look at the variance, and the same for equipment. And what this prompts us to do is that it prompts us to be able to ask questions. So why have we spent more money in salaries? Why is there a difference in our equipment cost? Why do we have a variance of 6,000, which is lower than what we projected that we will spend? And we then assign explanations to this, and we do that. So a variance is also very important in terms of looking at how we do our budget and how we do our cash flows. Okay. So in monitoring, budgets roll over and we review them all the time. Variance analysis is a tool we use. We amend the budget in the light of new information. Decisions are taken at management level, and there are problems if this is not done. And if we don't take care, it may jeopardize our future funding. So all in all, cash flow forecasting enables us to integrate and evaluate the effect of planned activity. It makes us possible that we anticipate cash surpluses and shortages and we deal with them. It helps us to compare actual performance to budget performance. And when we identify any unplanned events, we are able to either secure funding, either on a short-term arrangement with our bank. What cash flow forecasting helps to do is that it means that we see where we are inefficient and we correct it. And really, it helps us to calculate our funding requirements to lead us into a more forward-looking and progressive organization. And thank you for listening to me, and I'll be available to answer any questions. I know it's been tough going in terms of hope that I've been able to explain myself properly. Thank you.
Thank you very much, Adi. Thanks. That was very useful. Thank you. It is now 4:30, so we still have almost half an hour to deal with any queries from those attending. We have 14 participants, live participants. I have tried to deal with some of the specific questions that some organizations have put in the chat, and also there were several questions in the Q&A part. So Tracy, could you help us? What's the best way to sort of move forward and deal with those? Because I've been responding, and as I said, I've been directly with some of the queries that people raise.
Hi, if anyone would like to raise their hand and ask questions directly to either Ade or Fabricio, then just select the option to raise your hand. And we've got Simon here.
Hi, Simon, if you unmute your microphone, please. Thanks.
Yeah, I put the question in the chat room, but it's really just asking whether there's any advantage in using accounting software such as QuickBooks or Sage to help with cash flow and accounting.
Sage can help you in terms of doing your budgeting and your cash flow forecast, because Sage allows you to do a budget and allows you to actually do it using on a cash flow basis. So yes, Sage can be used to do a cash flow forecast.
Okay, you're silent on QuickBooks. Is that
on what? No, I mean, it's Sage that I really have used in the past, and I know
okay
and that's really because I operate more as a business consultant than as an accountant. So accountants use, and there are accountants who use very simple spreadsheets where you sort of plug this. So in terms of cash flow and forecasting, it's something you can do yourself, set it up yourself. But I know about Sage, so I can talk about Sage.
Okay, thank you very much.
Thank you, Simon. The next question from Liam. Hi, Liam, welcome. Would you like to raise your query?
Yes, thank you. As a very small organisation, we're applying for 10K. What format should I present my budget in for the second part of the application?
Well, it's actually looking at the cost that you would incur in terms of. So it's a very simple budget. Staff costs, who are the members of staff, project costs, you actually state the project cost. And then if you are buying any equipment, you put it there. If you have any overheads, and then you say that there's some evaluation costs.
I'm sorry, what was the last bit? Some what costs?
Evaluation or management costs. You see, what increasingly people are recommending is that organizations go from project to project funding.
Exactly.
And when the project ends, then they realize that they don't have any money. So in doing a budget and in presenting it to a funder, you let the funder know that you, the management of the organization, are actually going to spend some time in terms of supervising the project. And in some cases, you may call in an external evaluator to look at writing a report for you. So what I'm saying is that you should budget for those costs. You should not just do it as a matter of course.
Thank you, that's great.
Thank you, Lee. The next query, I don't have a name, I just have a number, so sorry. Would you like to introduce yourself, who you are, please, and just raise a query? Thank you. Hello?
Hi, can you hear me?
Yes, yes,
Yeah.
We can hear you.
Right, yeah, my name is Sandra and I'm from Light Project Pro International.
Thank you.
So I'm a bit confused because I thought the application had to be submitted within 5 days. and I was told that we had got through to stage 2, not this Friday, but the Friday before. And so when I had to submit, and then I didn't have a place on the cash flow thing until today. So when I submitted the application on Friday, I hadn't sat this webinar.
Yeah.
So it's obviously too late for me to improve the cash flow table that I submitted.
Can I just to be clear, because this is the second round, so this coming Friday is the deadline for those that have been invited to stage 2 under the second round. So you applied under round 2 or the first round?
No, well, round 1 was just, I applied under round 1, got through to round 2.
Okay, stage 2, sorry.
Stage 2.
Round is stage 2. So you applied for stage 1 under round 1, and you were successful, and then you were invited to submit the full application for stage 2 under round 1. And the deadline was on Friday. Did you submit it? Did you submit it on Friday? Sorry.
Yeah, I submitted on Friday because I was told that there was a 5-day window.
Exactly. Friday was the cutoff point, was the deadline.
Yeah.
So as you said, obviously, we ran a webinar last Monday for those organizations that they were putting together the full application, and we're hoping that quite a few organizations did get the benefit of both the webinar and the one-to-ones that we ran last week, and they were able to submit on Friday. But obviously, as you said, obviously it's quite late for you.
Yeah, so basically I've attended the webinar today, and it's too late now, isn't it?
Absolutely, because now you have submitted the application from last Friday, and now
I thought it was the deadline last Friday.
The deadline for stage 2, round 1, was last Friday. Yeah, 3 days. It was on the 7th.
So
7th of August was the deadline for round 1, stage 2.
Oh, round 1, stage 2.
Correct. Yeah. Now this Friday is a stage 2 for round 2.
Oh, right. And if we had been successful, we would know already.
No, for if you submit it for a stage 2, then you need to wait until the end of the month. I think the 28th of August, because obviously it has to go through the whole full assessment process, and that's going to take in the region of 3 weeks. So I'm happy to send me an email, please, and I'll send you the sort of key dates, although all the information is in the guidance, so you can see.
Yeah, no, I did read the guidance, and I am aware of the key dates, but I'm confused as to this webinar being dated.
This webinar was to help for those organizations in round 2, because last week we ran a webinar for those organizations in round 1. So this will be very useful. We're hoping that most people attending.
But if the deadline was last Friday, then I'm not sure.
Yeah, I think what you're saying is true. There is obviously there will be benefits that you will gain from this webinar, but it's too late because you already submitted the application form. So this is being submitted, so it's too late to be able to do any changes. Yeah.
Okay. Thank you.
You're welcome. Bye.
Right, thank you so much.
You're welcome. The next query, the next question from Andrew. Hi, Andrew. Welcome.
Hi, Fabrizio. Hi, Ade. Thank you
Hi.
for the email address, by the way. So I've forwarded on, and thank you for responding on so quickly. It is very confusing, I think, for a number of us who've not received this email or may have had an email. It was only because I chased it last week that I had an email back saying that we should have had an email. So when I've searched through, I certainly have not had an email. And so I was confused as to whether I should or should not be joining. I had the invite to join here, so I'm presuming that that is the correct procedure. So I'm looking forward to hear whether we've got through. And as this lady previously said, if the deadline's already gone, then we will have missed the first round. But we're still in with a shout this week, as long as somebody can please come back to me very urgently to give us that few days to get it in by Friday.
Yes, Andrew, as I said in my email, I'll find out, because it's very strange that I saw the correspondence from our partners saying that they have sent and asking you to check your spam folder. So, but obviously you haven't got it. That's the bottom line. So I'm going to find out first thing tomorrow what has happened with that notification. All the notifications for stage 1 applicants went out on Friday. So obviously you didn't get it for whatever reason, and I'll find out first thing tomorrow what has happened, and I'll ask them to come back to you. They just need to resend you the notification. It's very simple.
I think it'd be straightforward.
So when you get it tomorrow, you will still have 3 days, Andrew. So because Friday is the deadline, as you know, for round 2. Yeah.
Yeah, it is just a bit of a concern, of course, because my email went back to them on the 7th, and I still haven't heard anything back just yet. So with the clock ticking, it's very important that we get on top of this.
Yeah, I can tell you that obviously we in the last round there has been obviously the number of applicants, and I know that there have been some sort of technical glitches by large. Obviously, you are the sort of first case that I know that has been sent the email, and for whatever reason you haven't received it. We have received various comments and feedback from various other organizations, and we've been able to deal with those. But obviously, yours is a very atypical case. But as I said, I'll find out. Tomorrow is Tuesday. I'll find out first thing tomorrow, and then I'll come back to you.
Okay, appreciate that. Thank you, Fabrizio.
Okay.
Thank you. Thank you, Ade. Thank you.
Bye.
Bye-bye.
The next query, please. Who is there? Do we have any more queries of any people raising their hands? No?
There isn't anyone. Okay, Charles is up next.
Okay. Hi, Charles. Welcome. Would you like to raise your query, please? I think you
Hello, Charles, unmute yourself.
Please.
Unmute. Can you hear me now?
Yes, perfectly. Yes.
Sorry about that. Hi, both of you. I've got 2 questions regarding the stages. Our deadline is for tomorrow, so we are on stage. Round 3.
Right. Okay. So you are planning to submit for round 3, which the deadline is tomorrow. And you have a window from 10 a.m. until 1 o'clock to submit the stage 1 application for round 3.
Okay. And then when will we know about if we pass round 1? Or
by Friday. This Friday, the 7th, the 14th, you should receive an email, a notification saying whether your application has been successful for stage 1, and then you will be invited to stage 2.
And that gives us 5 days window to put an application for stage 2.
Correct. That's
okay,
correct.
5 days. And I've written it as a question, but it's a silly question maybe. On the application for stage 1, it asks for the postcodes that our beneficiary live in. Now, we are in Brighton, and we serve the community in Brighton. Now, there are obviously, as you can imagine, hundreds of postcodes, and you are asking for a full postcode. Can we just say the city of Brighton or BN? I don't know. What can we do?
I think what I suggest, yes, there will be a section in the form where you can put the full city of Brighton. But I also suggest in that section, if you could put the postcode of those users where the majority lives. So for instance, if there is one specific postcode where the majority of those users live, then just use that one basically. But yeah, there will be another section where you can put the full city of Brighton as the full catchment area. Yeah, does it make sense?
Okay, good. That makes sense. Yes. We'll just put some, and then we'll put the city of Brighton, and then if you want more information, then we'll go through stage 2.
Exactly.
Okay. Fine. Well, thank you very much.
You're welcome. Thank you. All right. The next question. Anybody else? Do we have Tracy? Do we have any more queries from?
And there's no queries yet.
Right. So if that's the case, I know that we're finishing a bit early, but I think maybe what we need to reinforce is about the one-to-one sessions. Adi?
Yeah.
You say something about the support that is going to be available and the dates.
Okay. I'm doing some one-to-one sessions on Thursday, and there's one slot on Wednesday, and next week on Monday, I'm also doing a one-on-one session. So I'm going to give you the address of my Calendly so that I think
people can make the
so that those who want to contact me can do so. Okay. And these are technical questions based on the cash flows. I know that I'm not going to be able to answer a lot of questions in terms of the stages. So if your question pertains to how you can be assisted to put in the cash flow forecast or to do a budget, I'll be more than willing and available to help you on that. Tracy, are you going to use the slide later on to give them the address?
Sure, I can put the slide up, but I've also put the link in the chat as well. I'll put
Okay.
And we will also put the link to the calendar to book those appointments with Added in our website as well. There will be a link in our website so that you can make those appointments for next week and for Thursday this week. Yeah. Okay, well, as we don't have any more queries from the audience, I would like to bring this to an end. Thank you very much to all those who were able to attend today. Thank you, and we wish you good luck with the application forms. We wish you all the best from me and from the team. Thank you. Are there anything else?
Yeah, no, that's all. Thank
you
all very much.
Yeah, thank you.
Thank you very much.
Bye, everyone.
Thank you.
Bye.